Alrighty. Good morning, everybody. Another London session with SPDas. Just gonna kick it off and get right to business. We've got a lot of stuff going on over here, and yeah, let's do it. SPDas, the trading floor is yours.
All right, thank you, Igor, and hello and welcome everyone. Come for the London session, 31st of Jan, and let's get started off with the hourly chart on the euro. Not hourly this time. Let's pick it up from the daily, and I need to show you something which is quite interesting. It was partially discussed last time as well. So here's a way to kind of figure out whether a low is in place or not, irrespective of price or using any other tool, and it normally works very well. You just need to observe the candles. All right, now a low is something which has got two candles to the left whose lows are higher than the current one, and at least that criteria has to be met, and thereafter you'll have another two candles on the right, maybe next 2 days after. If you observe today's low is at I think it's just print a low around 60. All right, that's the lowest, and you see the two candles are already there on the left hand side, which has got whose low are already higher than the one. So minimum criteria of a low, potential low which is in place is complete. I repeat, sir, minimum criteria is complete. So if the reason why I'm showing this is we have a trade set up here on the hourly chart. I'll get back to the bars. All right, we have a trade set up recommending go long around 360, 300 or 300. That's why I increased the range last session. Now, with that low in place, we got the criteria of potential low complete, and that's why I would not like to wait now. Of course, if you want to take in partial longs, it is absolutely no problems. But if you are still waiting exactly for the prices to drop towards the 300, or it is quite possible that prices drop below 300, okay, and then pick up from there. But as the minimum criteria completes, I would at least go and buy a partial lot size. All right. If you are positional, we've already brought. If you are not, and if you're looking to buy, that's the point. This is the point where you should at least buy 50% capacity. No change in the stop loss, no compromise. Please don't put the stop loss where we wish to. The stop loss will remain for now around 1.0775, just in case if we want to be right there. Ideally, it should be below that point. So I've recommended 1.0, 1.0100. Okay, another situation which might arise, we had that arrow still in place. I just removed on the daily chart. All right, quite possible that prices drop towards or converge towards the 300 mark. Remember, we did that extension as well, Fibonacci extensions. Let's do that for those who are joining in again. It is quite possible that it pushes or drags lower towards 320, 330 zone before reversing higher again. But the question is, would you want to wait until that time? I think what happened in Bitcoin, we all know, just about from 97, it was turned out and it turned away, and we never could get in. So at least get partial longs in place now. Otherwise, everything is good. This trade needs no further explanation. And the one thing which I'd like to bring up, which I said we'll bring it up in some time, is the target. So I'm going to flip the chart on a 4 hour time frame, and maybe we should be noting this as well. and I'm not going to move. Okay, I might need to move, but please note the first one is 750 and the second one is 1.11, which takes us all out completely with a potential new high very close to ourselves, the price action. Okay, one more thing let's test out since we are on the 4 hour time frame. There is nothing wrong in, it's a better practice actually, always drawing trend lines. There was a time, the first 8 years, none of the analysis would go without four things: trend lines, waves, Fibonacci's, and candlesticks. So here you are, sir. The backside of the trend line is converging somewhere close to 340 right now, as we speak. If more time passes, then it would slip lower and come close to 1.0310. Now, if we look at the exact convergence, it is 5th of February, that is next Wednesday, when prices are converging right across the backside of the trend line with the Fibonacci 61.8%. So I'm not saying that it's not possible for prices to drop below. I'm just saying a criteria for low has been met on the daily chart, and it's okay to go and buy at least partial in the long side, on the long side. Makes a lot of sense actually. In the RSI, okay, it's okay, 40. And okay, one more reason to go long, right? We never know, not to be overconfident about the points or the plots that we've done. It could be wave one, two, three here, and wave four could be just completing right now. So that could be one of the stories as well when the fifth wave is still left. All right, so I'm just putting all possibilities together. Even if that wave four is in place, there's going to be wave five higher, and then maybe next week we are going to see a bit more corrective drop again. All right, so let's not speculate into all those things. One simple strategy: at least 50%. If you buy right now, it would be good for the trade setup going forward. All right, so that's for the euro. Let's get back to the other two main instruments that we always keep on trading. It's the dollar index. I was looking at TPP USD as well just after the Tokyo Sydney overlap. It would be interesting to see that as well right now. Okay, now if you look at it, it's five waves rally, all that, and it's just below that 50% mark. So one of the criteria is at least get in 50%, and the remaining 50% you can get on the short side around 108.70. So the reason why, again, the same thing, our top is in place, potential. Technically, we are correct on the daily chart that a lower top is in place. Second, what if this is wave four? That means we are going to see one more wave lower, and it is quite possible because wave 4 normally converges around the 38.2% of wave 3. Now, if I take a retracement of the entire drop, then it is just above that 38.2%. It's coming around the 50% convergence, or not convergence, but Fibonacci ratio. And it's also very close to the previous wave 4 of one lesser degree. So, two strong reasons, in fact, three strong reasons: a diverging scenario, to at least enter 50% capacity. And the other possibility is why I'm saying keep another 50% capacity is 5, 3, 5, 3, and 5. That always remains possible. Okay. So trading point of view, the direction point of view, there is no change in the dollar index. We have been taking shorts aggressively around 1.110, sorry, and conservative around 109.50, 60 for 45.50. So positional traders, please add some more shorts if possible without disturbing your risk management. Only thing is the stop cannot be moved at this point in time as we are speaking. But once we have more than confirmed about the lower degree, the larger degree trend resuming on the downside, we will definitely get that stop from 110.50 to a lower level. All right. So that's the story for the dollar index. Okay, I was talking about pound. Now, if you look at the structure, what pound has, I mean, what pound has unfolded till now is as follows. You can see wave one, and then A, B, C. That could be wave two, and then one, two, three, four, five. So that could be wave one of three, two of three, three of three, four of three, and five of three. So is it wave three here? Quite possible, correct? And wave four there. It is quite possible that we still have one more leg to be completed on the north side. Let's take some help of. Let me first change the degree to minute. That third wave is kind of extended. This one. So if this is wave four, then the fifth wave, the pound has got one more rally to go and print another high, just around what 26.55 something. And if the RSI is around 40 right now, or bounced around 40 from around 40, then it further confirms that it could be potential wave four as well. All right, so we've got to just be prepared or keep our options open. That if this is wave four, maybe in one of the uh, major pairs, it could be wave four in the others as well. Not a rule though, but it could be very much possible for a potential wave four in place, and maybe we can see one more rally through the New York session today before the corrective decline resumes. And that's why, I mean, okay, I'm not recommending, maybe if you want to, you can. 24.17 we are right now. The stop loss would go around this price 22.40, 22.45. So let's say 1.2230, and we are right now 1.2417. So less than a couple of hundred points. And the target was poised around 26.50, which is again a couple of hundred points from here, just above the couple of hundred points mark. So 1 is to 1.25 kind of a risk reward ratio in the near term, not bad, maybe one or two sessions. So aggressive traders, or not aggressive, but towards the trend traders in pound, may look into initiating longs over here. All right. That was one chart I was just looking around while browsing. Sometimes I keep looking around opportunities. I didn't see anyone, any in dollar JPY. Let's try and find out. All right, so the curve is still pending. Look at that. Wave A is in place. Wave B went a bit deeper. So I'm going to push this wave B right here. And wave C is underway possibly. Unless and until this is wave 5 in the making, I think we are still good to remain on the on the waiting side for prices to reach around 156.97 or 157 for the second wave of a larger degree to complete before it begins to cut down on the north side. All right. So as far as the trading point of view is concerned, we don't recommend anything at this point in time, but somewhere around 157, please look or consider taking shots. The stop above 160 and the target you can keep open at least below 153, or maybe you can count on 150 or even lower than that. All right. I think now we can bring up gold, which is where the action is today. So one of the most common mistakes most traders make at this point in time is it is uh, ALH. That's what I got a message. It's all ATH. It says all-time high. So these are the trading languages which are being used. And when mostly the most common error likely to happen is when you go and buy here. There's a lot of noise right now going on fundamentally, and even if you look around your own circle of friends or relatives or anyone. So that's a psychological game. And you might be asked a question, okay, have you gotten on the long side in gold? And you say, no, I don't know what happened. And it's an all-time high, and they're projecting further towards 3,100, 3,200. So how come you're not in the gold right now? And you start scratching, and we start scratching head, and come across some trading platform or anything, and just for the sake of, okay, I am also in, and we commit ourselves. I'm not saying it's not possible for gold to print another high, but most of the time what happens is when such hype is created around an instrument with respect to the price and where it is heading next, that's one of the most common places where it reverses, and it reverses very sharply, not giving a chance for anyone to even take some action, and then you're stuck. And if it is a margin trading, you either end up pumping and pumping and pumping more margin, but there is an end to it sometime. So it eventually ends in a loss. And if you have invested, at least one good thing is that you don't have to pay margin, but you have to hold it for a while. So one of the most common entry point is at a peak when you enter buying. Always remember the rule, please. Buy low and sell high. The most layman rule is buy low and sell high. So right now, if you're not in, just stay silent and don't do anything. As far as our trades are concerned, we are now in from two prices. So our average price has now become 75, uh, possibly around 70, 80. I don't know what exactly with the figure would be like 45 divided by 222. So it becomes 77. So let's say 75 is our price now. So I'm going to just make an edit here to simplify that we are short from 75. 2775. All right. And our Our stop loss is 20, 28.20, and the take profits are those are heavy targets, 2700 and all the stuff. But maybe we'd be looking around to take some profits immediately around 2730. So that would be around uh, 1 is to 1, almost 1 is to 1 risk reward ratio, right? So I'm going to modify this as 2730. Maybe you can take some profits there. The only question now remains is, has a top been in place? Now I'm still not saying it's completely confirming a top, because this wave, okay, we can count it two waves because it's not breaking rules, and I told this earlier as well. Wave 4 is not entering the territory of wave 1, so we can still say it's 1, 2, 3, 4, and 5. And normally metals expand their fifth waves, especially when the fifth wave expands, it is quite possible. So I think this, we brought up this figure last time, 28 something, 28, 2800, 2. That has been met. So if a top is in place, prices are going to reverse very sharply. A break below 2764 would be an initial confirmation. I would say a break below 2747 is now required to confirm a top is in place. And I think worst come scenario is there will be a potential dip. There could be a potential dip where this is wave 3, and we are expecting wave 4 a bit lower. And on the 38.2%, it could drop towards the 75 region. That could be wave 4 of lower degree and then rally. But the one good thing which I've started to see now on the chart is the RSI. First of all, that peak and the new peak, huge difference. I don't think it's still there. It was there on the 15 minutes chart, quite clear. You see this peak, so quite a powerful divergence. But still, I would go with the hourly chart, and if I won't be surprised if it prints one more high when the while the RSI drags behind the previous high. All right, so that would be a place where if you are not entered, you might want to re-enter. But we are done with the shorts now. 2775, stop 2820, and these are the projected targets. So let's see now. Our job is done. If we are good in it, if the prices favor, we are going to see 2730 immediately, very soon. If it doesn't, then we might get tripped off, but already prepared for a top and reversal scenario very soon now. All right, and coins, a bit unfortunate. We are still, I mean, that backside trend line is being tested. It could be the support zone right now. So if you buy right now at 104, you can go ahead and take some position at about 25% of the capacity or so. But have your stop losses below 97. I mean, don't go around 89. All right, that's too much of risk. Maybe you can buy partial raw with a stop around 97. If it drops lower further towards 101 or 99, you might add some more, but keep your stop loss just around 97. Ideally, I think if it is back testing and it's completing the back test, should resume higher from here itself. Ethereum, we are almost at the break even, just about 50 points of risk. And it was suggested to take some partial profits off the desk last time. There is some delay in the charts coming up right now. So here we are. It went up, it dropped lower. If it is still not consolidating, we are heading up towards 33. But be prepared for a bit more sideways consolidation before it begins to cut loose on the north side. But we are good with a protective stop almost at a break even. We look forward for a new high towards 43 soon. So this one is good for us. We are all in. And Solana, I think we still have to wait around the 220 mark. So let's do that. There is a five-way movement. So if you want, no, I think but 35 is not a good one. There's no proper risk-reward ratio at all. It's better to wait until 220, which is 61.8%, and then buy with a stop around the 170. Even if it doesn't happen, it's okay. It's not compulsory to always be able to get in all the trades. And Ripple, now we are still away from our limit orders. So let's not rush. The only two coins that we have now is Ethereum and partial Bitcoin. Let's wait if there's some more consolidation or some more correction. But when this kind of tentative drop is there, it is a corrective wave, and that means the overall trend is set to resume anytime soon. Quite a bit unfortunate. We were well placed with the limit order, just about a few points higher the market reversed from. All right, then let's bring it a pause here, and we'll be back again in a few hours from now. 3.5 hours from now, or maybe 4 hours, sorry, to touch base again in the New York session two. Until then, thank you again for tuning in and watching. I'll be handing it over to Igor. Igor, back to you, brother. Thank you so much.
Thank you, SPDas. Always a pleasure.
Thanks.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple. With ForexLens, check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com. ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment